Welcome to Adventures in Infinite Banking, Episode 2. This account is about the adventure of a retired female whose main goal is to protect and grow her wealth. Now, those of you who are near or in retirement are going to really like this experience. This is the story of a woman who started her journey with infinite banking after she retired from her career. We met in 2017 when she was 68 years old. She had a couple of retirement accounts that were invested in the markets. And at the time, the markets were very unstable. She had lost some money as a result of market downturns, but her investment guy kept telling her to just write it out and, eventually she'd get her money back. But, the truth is, when you lose your money in the market, it's gone. You never get it back. Your account may eventually recover the amount that was lost, but you will never get the lost money back or the interest it could have gained had it not been lost. Anyway, she was determined to find something that she could rely on that would protect and grow her money without the risk of losing any more. She did some research. She found infinite banking. Then she found me. So if you're new to this channel, welcome and aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm the author of the books on the tax-free cash growth warehouse and managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the last decade or so, I've specialized in and focused on the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. To protect her privacy, I'm going to refer to this dear lady as Pua, not her real name, but a real sweet gal, and I consider a dear friend. Now, Pua had accumulated a few $100,000 in her retirement accounts over the years. She certainly did not want to lose any more than she already had in the recent market failures. But she also didn't want to have to pay sky-high premiums forever either. So we worked out a strategy that would keep her money safe and earning some good interest while we gradually moved it into her new tax-free cash growth warehouse account. You see, the IRS has imposed a limit to how much money you can load into a life insurance policy in any 1 year or over a 7-year period. That limit is based on the size of the policy and the required annual premium for that particular policy. That limit is called the MEC limit, or 7-pay rule. Especially for infinite banking, we do not want to exceed that limit, because when we do, we lose the tax-free growth benefit. And we like the tax-free growth. Oh, yes, we do. So what we did was to open a short-term guaranteed annuity that we could roll her retirement funds into without incurring any tax. And that way, her money would be growing at a decent rate, guaranteed and protected, as we gradually fed that money into her new tax-free cash growth warehouse account. At that time, the interest rate for the annuity was close to 4% annual. The dividend interest rate for her new life policy would be 7%. Meanwhile, banks were paying only a fraction of 1%. So 3.5% or 4% was pretty darn good. So Pua rolled all her retirement money into the annuity and closed those other retirement accounts. And being that we set up an immediate annuity for her shortly after the money was transferred into the annuity, it paid out enough to cover the first year's premium. Then for the next 9 years, it would pay out the same amount for premiums until all the money was moved into the tax-free cash growth warehouse account. That way, while the retirement money had been tax deferred, and she would have to pay tax on it, she only had to pay tax on the amount that she took from the annuity each year. And she wouldn't have to pay tax until after it was safely in her new tax-free cash growth warehouse account and earning high compounding interest. And then she didn't have to pay the tax until the annual tax filing time came around. But the real beauty of that is she could now leverage the cash value in her tax-free cash growth warehouse account to take a policy loan to pay the tax, while her money stayed in her tax-free cash growth warehouse account, earning that high compounding interest. Meanwhile, the rest of her retirement funds would be safely growing at a good interest rate with no risk of loss. And all the time, she was systematically moving it into her tax-free cash growth warehouse account, where it continues to grow with outstandingly high compounding interest. Now, here's how the money numbers have worked out for her. Now, the first couple of years, she loaded up the cash value of her account near to the MEC limit. Then she cut back to the ongoing scheduled premium amount. All told, she paid in a total of $380,000 over the first 6 years of her policy. In just the same 6 years, the cash value of her policy has grown to $463,000. That's an $83,000 gain over what she had paid in just 6 years. That's a 17.9% gain. I'm sure you'll agree. That's some kind of wonderful. But you want to know what's even more wonderful? With the money in her tax-free cash growth warehouse, she has been able to save her family home. When Pua started her tax-free cash growth warehouse, one of her goals, besides protecting and growing her money, was to help her siblings when and if they needed financial help. Well, up to just this year, nothing was needed by them. Now, Pua's aged mother was living in the family home, and Pua's brother was living with her and taking care of her. Well, as happens to pretty much everybody eventually, their mom died. But that wasn't the only sad thing that happened. Some years prior to this, brother and mom took out a reverse mortgage on the home. So when mom died, all of a sudden, either the siblings had to pay off the reverse mortgage, or brother would have to move out and the property would be surrendered to the mortgage holder. And here's another thing. The property had gained in value. So if they didn't pay off the mortgage, they would not only lose the house, but they would lose some $300,000 in equity value as well. Now, the payoff on the mortgage was $600,000. Pua's brother and sister could only come up with $200,000. And as it was, that was a bit complicated, but they were able to get that. Still, another $400,000 was needed in order to save the family home, and in a hurry. The mortgage holder was not willing to extend the payoff period. They wanted to grab the property and make a nice profit, which they could have done and would have done if the siblings couldn't come up with the total needed to pay off the mortgage. Well, you guessed it, infinite banking saved the day. Pua was able to get a policy loan in just a matter of days. And fortunately for her and her siblings, she had enough in her tax-free cash growth warehouse to cover the $400,000 balance. But that's not all. Now you might think, yeah, she saved the family home, but now her tax-free cash growth warehouse account and all her retirement money is drained. But it's not. You see, with these very special accounts and the infinite banking advantages, Pua's money is still safely in her tax-free cash growth warehouse and earning high compounding dividend interest, currently at 6.1% annual. So even though she has leveraged $400,000 of her money in the account, she will still earn over $25,000 on that same money this year in interest alone. And that will be paid to her account whether she makes any payments on her policy loan or not. And the $25,000 she will earn in interest will be tax-free. Yeah. And the interest she is charged on the loan will be at least partly deductible from her income tax. Now, remember, Pua was 68 years old when she started her infinite banking journey. She wisely moved her at-risk retirement investment accounts into her safe and protected tax-free cash growth warehouse account, where it has been protected and safely growing with high compounding tax-free dividend interest. And as a result, she has realized a significant gain that she does not have to pay tax on and can use at will by leveraging it with policy loans. And since just the 4th year, her life insurance policy has been virtually free because all the money she puts into it with her premium payments is going into her cash value of the account and adding to the compounding interest it earns. And the life insurance benefit is growing at the same time. You know, I love telling these stories because they're true and duplicatable. You can do this too. Obviously, the earlier, younger, healthier a person is, the better and more advantageous it is to start your tax-free cash growth warehouse account and infinite banking. But even in retirement, the finance strategies that you can work with infinite banking and a tax-free cash growth warehouse account are tremendously beneficial. Please like this video and subscribe to this channel. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below here. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also below. We're here to help. We look forward to helping you. Aloha and mahalo for watching.